And I'd like to talk for just a second about that. In fact, there was a fellow that Pete Kiewit in Omaha used to say that he looked for three things in hiring people. He looked for integrity, intelligence, and energy. And he said if that person didn't have the first two, that the latter two would kill him. Because if they don't have integrity, you want them dumb and lazy. You don't want them smart and energetic.
Hey everyone, Alex Ionescu here. Welcome to Investor's Guide to the Galaxy. How to be a great stock investor. Investing and life tips from none other than Warren Buffett. Let's dive right into it. Berkshire Hathaway stock price on December the 2nd is down 0.23%. Year to date is up 4.77%. Past year is up 12%. Past 5 years is up 62%. I came across a very interesting lecture from 1998 with Warren Buffett at the University of Florida, and I wanted to share it with you. I recommend you watch the whole video. It's 1 hour and 24 minutes long. Here, Warren Buffett is talking about integrity, intelligence, and energy.
There was a fellow that Pete Kiewit in Omaha used to say that he looked for three things in hiring people. He looked for integrity, intelligence, and energy. And he said if that person didn't have the first two, that the latter two would kill him. Because if they don't have integrity, you want them dumb and lazy. You don't want them smart and energetic. And I really like to talk about that first one because we know you've got the second two. And to play along with me in a little game for just a second in terms of thinking about that question. You've all been here, I guess almost all of your second year MBAs, and you've gotten to know your classmates. And think for a moment that I granted you the right to buy 10% of one of your classmates for the rest of his or her lifetime. Now you can't pick one with a rich father; that doesn't count. I mean, you've got to pick somebody who's going to do it on their own merit. And I gave you an hour to think about it. Which one are you going to pick among all your classmates as for the one you want to own 10% of for the rest of their lifetime? Are you going to give them an IQ test? Pick the one with the highest IQ? I doubt it. Are you going to pick the one with the best grades? I doubt it. You're not even going to pick the most energetic one necessarily. You're the one that displays the most initiative. But you're going to start looking for qualitative factors in addition to, because everybody's got enough brain here and enough energy. And I would say that if you thought about it for an hour and decided who you're going to place that bet on, you'd probably pick the one who you responded the best to, because the one that was going to have the leadership qualities, the ones that was going to be able to get other people to carry out their interests. And that would be the person who was generous and honest and who gave credit to other people even for their own ideas, all kinds of qualities like that. And you could write down those qualities that you admire in this other person, whoever you admire most in the class. And then I would throw in a hooker. I would say as part of owning 10% of this person, you had to agree to go short 10% of somebody else in the class. That's more fun, isn't it? And you think, well, now who do I want to go short of? And again, you wouldn't pick the person with the lowest IQ you would start thinking about the person really who turned you off for one reason or another. I mean, they had various qualities, quite apart from their academic achievement, but they had various qualities. In the end, you shouldn't really want to be around them, and other people didn't want to be around them. And what were the qualities that lead to that? Well, there'd be a whole bunch of things, but it's the person who's egotistical, the person who's greedy, the person who's slightly dishonest, cuts corners, all of these qualities. And you could write those down on the right-hand side of the page. And when you look at that, you can see why I avoid technology. Chewing gum is about as far as I get. As you looked at those qualities on the left and right-hand side, there's one interesting thing about them. It's not the ability to throw a football 60 yards. It's not the ability to run the 100-yard dash in 9.3. It's not being the best-looking person in the class. They're all qualities that if you really want to have the ones on the left-hand side, you can have them. I mean, they're qualities of behavior, temperament, character that are achievable. They're not forbidden to anybody in this group. And if you look at the qualities on the right-hand side, the ones that you find turn you off in other people, there's not a quality there that you have to have. If you have it, you can get rid of it.
You can choose your habits and behavior. It's a question of which you decide to have. Benjamin Graham, in his teens, wanted to be admired. So why don't I just copy the habits of a person that is admired? it is not impossible to do this. In fact, it is pretty possible and smart to do this.
And you can get rid of it a lot easier at your age than you can at my age, because most behavior is habitual, and they say the chains of habit are too light to be felt until they're too heavy to be broken. And there's no question about it. I see people with these self-destructive behavior patterns at my age or even 10 or 20 years younger, and they really are entrapped by them. They go around and they do things that turn off other people right and left, and they don't need to be that way, but by a certain point they get so they can hardly change it. But at your age you can have any habits, any patterns of behavior that you wish. It's simply a question of which you decide, and why not decide the ones that, I mean, if you like, Ben Graham did this, and Ben Franklin did it before him, but Ben Graham in his low teens looked around and he looked at the people he admired, and he said, you know, I want to be admired, so why don't I just behave like them? And he found there was nothing impossible about behaving like them. And similarly, he did the same thing on the reverse side in terms of getting rid of those qualities. So I would suggest that if you write those qualities down and think about them a little while and make them habitual, you will be the one that you want to buy 10% of when you get all through. And the beauty of it is you already own 100%. You're stuck with it, so you might as well be that person as somebody else. Well, that's...
If you buy a great business at a higher stock price, in the long term, this will still do very good, because it's a great business, and great businesses grow revenue or stay constant. If you buy a cheap stock from a business that is doing poorly, in the long run, it will be very bad for you and for your portfolio.
It was the first way I went at stocks, to buy stocks selling way below working capital, very cheap quantitative stocks. I call it the cigar butt approach to investing, is that you walk down the street and you look around for a cigar butt someplace, and you finally see one, and it's soggy and kind of repulsive, but there's one puff left in it. So you pick it up, and the puff is free. I mean, it's a cigar butt stock. I mean, you get one free puff out of it, and then you throw it away and you walk down the street and try and find another one. I mean, it's not elegant, but it works. You know, if you're looking for a free puff, it works. Those are low return businesses, but time is the friend of the wonderful business. It's the enemy of the lousy business. If you're in a lousy business for a long time, you're going to get a lousy result, even if you buy it cheap. If you're in a wonderful business for a long time, even if you pay a little too much going in, you're going to get a wonderful result if you stay in a long time. I find very few wonderful businesses in Japan at present now. They may change the culture in some way so that managements get more stockholder responsive over there and returns are higher. But at the present time, you'll find a very lot of low return businesses, and that was true even when the Japanese economy was booming. I mean, it's amazing. They had an incredible market without incredible companies. They were incredible in terms of doing a lot of business, but they weren't incredible in terms of the return on equity that they achieved. And that finally caught up with them. So we have so far done nothing there, but as long as money's 1%, I'll keep looking. I mean,
You got to get to rich once. Then, after that, it's pretty easy.
There was a great book. It wasn't a great book. It was a great title. There was a lousy book written once with a great title by Walter Gutman. The title was "You Only Have to Get Rich Once." Now, that seems pretty fundamental, doesn't it? What difference if you've got $100 million at the start of the year, and you're going to make 10% if you're unleveraged and 20% if you're leveraged 99 times out of 100? What difference does it make at the end of the year whether you've got 110 million or 120 million? Makes no difference at all. I mean, if you die at the end of the year, you know, the guy that writes up the story may make a typo, and he may say 110 even if he had 120. So you've got nothing at all. You know what? It makes absolutely no difference. It makes no difference to your family. It makes no difference to anything. And yet the downside, particularly managing other people's money, is not only losing all your money, but it's disgrace and humiliation and facing friends whose money you've lost and everything. I just can't imagine an equation that makes sense for. And
I'd like to know your opinion on all of this. Please leave a comment below. If you like this video, please smash that like button so that other people like you see this video, and don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.